Rajiv Sabharwal, MD and CEO at Tata Capital, to chat about various other things, actually. Rajiv, hi, good morning. Good to have you on the show. Broadly wanted to understand what are your own expectations from the budget? Just a week away, especially in light of the GDP growth hitting a 5-year low. What can the finance minister do to propel growth back into the economy?
Good morning, first of all, and there are obviously a lot of expectations from the budget. The most important being revival of the growth. We've seen some amount of moderation in growth, and everybody's looking at how growth can come back, and that will actually also enable the financial services market to also do well. The other thing what the industry is looking at is how more liquidity can be provided to the industry. It's very important that more long-term sources are made available to the industry, especially now since incrementally 25% of the monies have to come from the markets. It's very important that we allow for more instruments to be available so that the bond market can be deepened and more money is available. The third thing is also about the transmission of cut in interest rates. While the RBI has brought down their rates, I think the industry has not seen the transmission of rates happening. All these things are extremely important. For example, of late there is a fair amount of ECB money coming into the market, and more so for large players. But how can we ensure that the cost of this money can come down? For example, some relief was provided on withholding tax for masala bonds till March 31. Can some of these things be also offered for ECBs? What is overall very essential is the growth to be back, liquidity to be available, and liquidity to be available at lower interest rates.
Okay, now also, given the entire NBFC sector is facing tight liquidity and trust deficit, what are your expectations from the sector? Because, expectations from this space are really riding high for the finance minister.
I think, for the growth of the industry, it's very important, as I mentioned, the revival of the growth in the core sector, and especially for industries which provide a lot of job employment, whether it is the real estate industry, the textile industry, or for example the whole distribution chain, for example for automobiles. So some of these industries have to revive back. Once this happens, I think so the market will grow. As far as liquidity is concerned, as I mentioned to you, availability of more liquidity in the market, whether through OMOs or whether through SLR, CRR cuts, some of these instruments will help more liquidity to be available, as well as transmission of rates is equally important. As I mentioned to you, if money is coming through ECB, can we widen the reasons for which we get ECBs, in the sense there are certain clauses which restrict the purposes for which ECBs can be raised. Can we look at widening those clauses and making the whole thing more tax efficient?
Also wanted to understand, when it comes to the MSME sector, which has, really been in the headlines for the right or the wrong reasons, that sector is also very crucial for the growth of the economy. But the sector has been under stress for a while. What do you think can be done to resolve the challenges purely on the MSME front?
If you look at it, there are the reasons why this sector is facing a problem is obviously there is a contraction in demand, and whenever there is a contraction in demand, obviously the sales get impacted. The other reason is some of the working capital cycles are also getting elongated, and because of these reasons, the impact is being felt across the industry in the MSME, as well as people who are lending to these MSMEs. So I somewhere feel that how we enable more money in the hands of the customer, which will help revive demand, and then ensure that there are there's more liquidity such that even if there are some elongations in working capital cycles, the same can be absorbed.
Now, what, according to you, can be done in order to address the broad risk averseness that we're seeing within the NBFC sector? Do you have any expectations or what you would like to see on this front?
I think the regulator of late has been looking at how this whole sector can be made stable and can, for example, certain guidelines which have been coming on, LCA norms or how liquidity needs to be maintained. All these are good things for the future. I believe creating a system where there is stability in terms of the companies being there for the long term will help the system. I think what is more important at this point of time, and I keep saying this, is how more liquidity is introduced into the system and transmission of interest rates happen. If that is taken care of, I think as far as well-capitalized large companies are concerned, we will see good growth happening.
Well, we've seen the consumption slow down and the investment cycle yet to pick up. There are concerns on that front. So how do you think that the government can balance out consumption and investment demand?
I think we have seen capacity utilizations going up, and that's happening across the industry. New investment on the private sector has not been happening. And the reason is that people have to be confident of the future growth. People invest looking at how the future is. There is, like for example, last year there was talk about bringing down the corporate tax rates, looking at how tax rates for individuals can be reduced. If there are benefits which can be given to individuals who invest in the bond market. If some of these things can be done, I think so this will give a fillip to the market, which will make more money available in the hands of individuals. We should remember that if we have to look at long-term growth, whether it's in the financial services space or in the consumer, we have to have more money available in the hands of customers. And that, if we can enable that, I think so growth will happen and there will be more private investments coming in.
Great speaking with you today. Thank you so much for taking the time and chatting with us.
Thank you so much.